I keep hearing about Roth IRA in almost every US investing video, but I still don't clearly understand what it actually is in simple words, or why it is considered such an important part of retirement planning. Roth IRA is a retirement account in the US designed to give you tax advantages on long-term investing. The basic idea is that you contribute money after paying taxes today, and then your investments grow inside the account without being taxed again in the future. When you withdraw in retirement under the allowed conditions, that money is usually tax-free. It's not an investment itself, but a structure that helps your investments grow more efficiently over time. If it is just a retirement account, and not even an investment itself, then why do so many financial experts treat Roth IRA as something almost essential for long-term wealth building? The main reason is taxes and compounding over long periods. In a normal investment account, taxes reduce your overall gains whenever you sell or earn income. But in Roth IRA, qualified withdrawals are tax-free, which allows your money to compound without future tax deductions. Over decades, this difference becomes very significant in total wealth accumulation. Does that mean I never pay taxes at all if I use Roth IRA, or is there still some point where I have to pay tax during the process? You still pay taxes, but only at the beginning. You contribute money after paying income tax on it, so there is no tax deduction upfront. The benefit comes later because all growth inside your account and qualified withdrawals in retirement are generally tax-free. So it's more about timing of taxes rather than avoiding them completely. Why would the government even allow something like tax-free growth instead of just taxing everything normally like they do in regular investment accounts? The government uses Roth IRA as an incentive to encourage people to save for retirement early and consistently. If individuals build their own retirement wealth, they are less dependent on government support later in life. So in exchange for taxing money up front, they reward long-term savings with tax-free growth in retirement. Is Roth IRA something only high-income or experienced investors use, or can beginners with small amounts of money actually benefit from it as well? Roth IRA is actually very useful for beginners because it does not require large starting capital. Even small monthly contributions can grow significantly over long periods due to compounding. The key factor is consistency in time, not how much money you start with initially. What exactly can I invest inside a Roth IRA account? Am I limited to certain options, or can I choose freely like in a normal brokerage account? Inside a Roth IRA, you can usually invest in stocks, ETFs, index funds, and other approved investment options depending on your broker. Most beginners choose diversified ETFs or index funds because they reduce risk and simplify decision-making. The account itself is just a wrapper, and your investments inside determine actual performance. So if Roth IRA is just a container, does that mean the risk is completely dependent on what I invest inside it rather than the account itself? Exactly. The Roth IRA does not reduce or increase market risk by itself. If you invest in stocks, your account will behave like stock market investing. If you invest in diversified ETFs, risk becomes more balanced. The advantage of Roth IRA is tax treatment, not protection from market movements. Can I withdraw money anytime from Roth IRA like a savings account, or are there strict rules and penalties I should know about? Roth IRA is meant for retirement, so there are rules around withdrawals. Early withdrawals of earnings may lead to taxes or penalties if conditions are not met. However, contributions are often more flexible than earnings. This structure encourages long-term investing discipline rather than short-term use. What makes Roth IRA more powerful compared to just investing the same money in a normal taxable brokerage account? The key difference is taxation on growth. In taxable accounts, you may pay taxes on dividends, capital gains, or selling investments. In Roth IRA, qualified withdrawals are tax-free, which allows compounding to work without being reduced by future tax deductions. Over decades, this difference can significantly impact total retirement wealth. If I start a Roth IRA today, How long does it usually take before it becomes meaningful enough to actually impact my retirement planning? Roth IRA is a long-term strategy, so its true value becomes visible over 10 to 30 years. The power comes from consistent contributions combined with compounding growth over time. The longer your money stays invested, the more noticeable the tax advantage becomes compared to regular accounts. Is Roth IRA alone enough for retirement planning, or do people usually combine it with other investment accounts for better financial balance? Most people combine Roth IRA with other accounts like 401k or taxable brokerage accounts. This creates tax diversification, which means different parts of your money are taxed differently. It gives more flexibility during retirement withdrawals and reduces dependence on a single account type. What is the biggest mistake beginners usually make when they first open a Roth IRA and start investing money inside it? One big mistake is treating it like a trading account instead of a long-term retirement tool. People sometimes withdraw money early or constantly change strategies, which reduces long-term benefits. Another mistake is inconsistent contributions, which weakens the effect of compounding over time. Is there any income limit or eligibility rule that could prevent someone from contributing to a Roth IRA even if they want to start investing? Yes, Roth IRA has income limits in the U.S. system. Depending on your annual income, your eligibility to contribute fully or partially may change. That's why understanding IRS rules and limits is important before planning contributions. It's not completely open for every income level in all cases. If I use Roth IRA correctly for many years with discipline, what is the main financial advantage I actually get compared to regular investing accounts? The main advantage is tax-free compounding over a long period of time. Instead of losing a portion of your gains to future taxes, your money continues growing without tax drag inside the account. Over decades, this creates a meaningful difference in total retirement wealth compared to taxable investing accounts. How important is consistency in Roth IRA contributions compared to trying to time the market or invest large amounts at the perfect moment? Consistency is far more important than timing. Most investors fail because they wait for perfect entry points that never really come consistently. Regular contributions over time allow compounding to smooth out market ups and downs, which is more effective than trying to predict short-term movements. If I miss contributions in some years or stop investing temporarily, does it completely ruin the benefit of Roth IRA in the long run? It doesn't ruin it completely, but it reduces the overall compounding potential. The earlier and more consistently you contribute, the stronger the long-term effect becomes. Time in the market matters more than perfection, but interruptions do slow down total growth potential. Why do some investors say Roth IRA is especially powerful for younger people compared to those who start investing later in life? Because younger investors have more time for compounding to work. Even small contributions can grow significantly over 20 to 40 years. The longer the investment horizon, the more tax-free growth benefits accumulate, which makes early starting very powerful. If Roth IRA is so beneficial, why don't all investors max it out every year automatically without thinking? Moise. The main limitation is income, budgeting, and financial discipline. Not everyone has extra money to consistently max contributions every year. Also, some people prioritize short-term needs, which reduces their ability to fully utilize long-term accounts like Roth IRA. Can Roth IRA be used for early retirement strategies, or is it strictly designed for traditional retirement age only? It is mainly designed for retirement, but some strategies allow early access under specific conditions. However, the core purpose remains long-term savings. Most people use it as part of retirement planning rather than early withdrawal strategies. If markets go through crashes or long downturns, how does Roth IRA actually protect or perform during those periods? Roth IRA itself does not protect you from market crashes. Your investments inside the account still go up and down with the market. The advantage is that you don't lose tax efficiency and long-term growth, and recovery benefits remain fully intact when markets bounce back. What is the difference between Roth IRA and a traditional IRA? Because both are called retirement accounts, but people keep saying they work completely differently. The main difference is when you pay taxes. In a traditional IRA, you usually get a tax deduction today, but you pay taxes when you withdraw in retirement. In Roth IRA, you pay taxes today, but withdrawals in retirement are tax-free. So it's basically a choice between tax now or tax later. So how do I know which one is better for me personally, since both Roth and traditional IRA sound useful but in different ways? It usually depends on your current income and expected future income. If you think your income will be higher in retirement, Roth IRA can be more beneficial. If you expect lower income later, traditional IRA might make more sense. It's basically a tax timing decision based on your financial situation. Can I have both Roth IRA and a normal brokerage account at the same time, or do I have to choose only one for investing my money? Yes, you can absolutely have both at the same time. Many investors use Roth IRA for long-term retirement savings and a brokerage account for flexibility. This combination gives both tax advantages and liquidity. It's actually a very common strategy in the US. What happens if I accidentally withdraw money early from Roth IRA before retirement? Does it completely cancel the benefits I gained? Early withdrawals can reduce benefits depending on what you withdraw. Contributions are usually more flexible, but earnings may be subject to taxes and penalties if taken out early. That's why Roth IRA is structured to discourage short-term use and encourage long-term discipline. Is Roth IRA affected by stock market crashes, or does the tax advantage somehow protect my money from losing value? Roth IRA does not protect you from market risk at all. If the market goes down, your investments inside the account will also decrease in value. The benefit is not protection from loss, but tax-free growth when the market recovers over time. Why do people say Roth IRA becomes more powerful the longer you hold it instead of trying to use it for your short-term investing? Because compounding needs time to show real impact. In early years, growth looks small and slow. But over long periods, reinvested gains start building on previous gains, and tax-free status makes that compounding even stronger. Time is the real multiplier here. If I start late, like in my 30s or 40s, does Roth IRA still make sense, or is it mostly useful only for people who start very early? It still makes sense even if you start later. You may have less total time for compounding, but tax-free growth is still valuable. The key difference is that earlier starters get more exponential effect, while late starters still benefit but with a shorter growth window. What is the most realistic expectation I should have from Roth IRA instead of thinking it will make me rich quickly? Roth IRA is not a get-rich-quick system. It is a slow wealth-building tool designed for retirement stability. The realistic expectation is steady long-term growth combined with tax efficiency, not sudden large returns in short time periods. If someone contributes consistently for 20-30 years, what role does Roth IRA actually play in their financial independence or retirement life? It can become a strong part of retirement income because withdrawals are tax-free. That means more of your money is usable compared to taxable accounts. It doesn't guarantee wealth alone, but it supports financial stability when combined with good investing habits. So if you had to explain Roth IRA in the simplest final lesson for a beginner who is completely new to investing, what would you say? I would say Roth IRA is not about making fast money, it's about protecting future growth from unnecessary taxes. It rewards patience, consistency, and long-term thinking. If you understand time and discipline, Roth IRA becomes one of the most effective retirement tools available.